Hey guys, Zoe here for OneGlanceTrader.com, and in today's video I'm going to be talking about what makes a significant engulfing candle. Now, I've had a number of people reach out to me asking for more examples of an engulfing bar pattern using the OGT price action indicator, what my settings are, and how would you trade it if a signal comes up. So first and foremost is every time you get a signal from the OGT price action indicator, whether it's a doji pin bar or a engulfing bar, you do not enter straight away on the open of the next bar. There are other things that I like to use, as sure many of you wear confluence, and divergence is probably one of my most favorite tools that I use to confirm trades. So before I go into that and show you this chart that I've got prepared, I'm just going to quickly go through the rules for engulfing pattern, or big shadow, as some people like to call it. So the first rule is that the engulfing bar range is within the previous candle. So the low and the high is within, or engulfed rather, in the previous candle. Yep. So the engulfing bar range is greater than the previous 5 candles. Now, when I talk about significant engulfing candles or bars, I'm talking about the bigger the better, the more likely a reversal is gonna happen. So in the settings of the OGT price action indicator, which I'll go through in a second, you can actually change that. So obviously, the more bigger the engulfing bar is than the previous X number of candles, the less signals you're going to get. Obviously, the lower the number, the higher signals you're going to get. So it all really depends. Are you trying to look for those grade A quality trades, or just want to see a lot of signals and then discretionarily make the decision whether or not to enter the trade or not? Because there are times where you put 0 as the previous candle, get loads and loads of signals, and a lot of them do actually turn out to be very good trades. So again, have a play with it, have a look at it, and decide what you do. But I normally keep it to the default of 5 candles. Um, the engulfing bar body fills the majority of its range. So as you can see in this bar here of this sell signal, the body covers the majority of the range. And again, the bigger the better. So again, this can also be modified in the indicator setting. So I think the default is set at 70%. That's why I leave it on. Again, the higher the number, the less signals, the lower the number, the more signals. So again, it's up to you. And the reason why I do 70 is because if you left it to 10 or 20% of the range, you're going to start looking at dojis effectively, depending on where they form, because the body is not that big. So or even pin bars even. So again, you want to, engulfing is that body is absolutely huge and fills the majority of the candle. And lastly, engulfing patterns that print in a logical location. Now, I can't really stress this enough. It's probably one of the most important factors is for it to be significant, it's got to print in a logical place. Whether it is on a support and resistance line for a potential reversal or a bounce, or it appears within a strong trend for a trend continuation. And we'll look at 2 of those examples, well, both those examples rather, in this video. So I hope that makes sense. And now let's get on with the charts. So I've got a USD JPY 5-minute chart on, we'll be looking at the 15th of November. Today is the 17th of November, so only a couple of days ago, trying to keep it as relevant as possible. Now, if we go look at the indicator list of the OGT, again, don't worry about the pin bar and the doji, even though it's set to true. So the engulfing is set to true, so you can show this. And the engulfing setting. So this is why I said the quantity of previous candle range check. So again, I've set that to 5. So the engulfing bar needs to be greater than the previous 5 candles. And the body needs to fill 70% of the range of the candle. So those are the 2 settings left at default. I've not changed anything else. Now, should really mention that if you want to download the OGT price action indicator, the link is actually below, so make sure you go check that out. It's 100% free. So what I'm going to do is I'm going to talk around this one, this one, this one, and this one. These two, not really going to focus on here. So the first three are continuation of trends trades. So the way I like to see it is you can see we're in an uptrend here, so none of this stuff exists. And the key thing I look at is then divergence. So I like to use the momentum indicator. Again, this can work with stochastics, it can work with RSI. If the stochastics, RSI, and momentum are all diverging or converging, either depending on what you're looking at, then again it gives you more confirmation. But I tend to only really look at the momentum indicator for my divergence. So you can see here that, if we look at the two peaks, so this is the first peak there, and the second peak is about, where's it gone? Where's that bar gone? About there. So you can actually see that this is actually diverging the other way. So it's making higher highs on price, and it's making lower highs on the indicator. So for me personally, even though this trade does take off, I personally wouldn't trade this pin bar. So again, just going back to the question and people were asking is how do I make a decision whether or not to trade it or not? Is personally I wouldn't trade it because at this point I would see that information there. So that was that one. Okay, it takes off. I missed the trade, but you're gonna miss trades every now and again. So now we look at this bar over here. Yep. Again, downtrend. We can see now the market has reversed, starting to go down. So it is making lower lows, and at the same time, if we pick it right, well, even if you pick it here, is again making lower lows. So there is no divergence within price and the indicator, and also price has dropped below the 100 line, which again is showing that momentum is to the downside. So what I would do is set a pending order underneath that. I'll probably give it 2-3 bars. If it doesn't trigger within 2-3 bars, I would cancel the order and leave it. And then you'll have your stop in a logical place up there, 8.5 pips, and a 2-to-1, let's say 16 pips. You make it quite comfortably on this next engulfing bar that comes up there. So again, no trade here, one trade over here, a nice 2-to-1, 1-to-1, 3-to-1, whatever it is that your exit strategy is, or a trailing stop. Now we look at this engulfing bar here. Again, hits our criterias, making lower lows. But we actually then now look at the momentum indicator. If we get the low, assume that this is the last peak to there, you can clearly see that the momentum indicator is making higher lows. Again, talking about potentially that this trend is running out of steam and there is a potential to reverse. So for me, I wouldn't take this trade. And as we can see, it does, halt where here is it continued. Fine, fair enough. Where here it actually stopped and halted and actually went into a range. So, if we put, say that there and hit the lows around there, multiple touches here you can see here and multiple touches here at resistance there. So then the market started ranging. And then we see another bullish engulfing, a very significant bar here. A very significant bar. So the first thing, like I said, I like to do is I know the direction. Is it uptrending, downtrending, or it's in a range? It's in a range. It pretty much filled the whole of that range. And next thing I look for is divergence. So again, this is pretty much flat, if we take the highs, but we take the high or the low here to the low of the bar, we now see divergence, or price now starting to go up. So here, what I would like to see here, because I know I'm inside a range, obviously I'm waiting to see what happens. I probably wouldn't do a entry here. What I'm probably looking for here is obviously a breakout, and then obviously a break above 100 on the momentum, which you get it on this bar over here. You get it on this bar over here, which also conveniently breaks above that trend line, uh, above that resistance line. But I probably would, look to see once price has broken out here and it goes back and then actually touches this line again and then boosts off again. So depending, this is more of a breakout trade than probably as a reversal trade, so to speak. So it depends what type of trader you are. Do you go with it and then ride it and then put it, the stop here or the stop here or trail or however you do it, or are you a breakout pullback trader where you breaks out, you wait for it to do here, and again, unfortunately this looks like a good engulfing bar, but unfortunately, because it looks like the low is just lower than the low of the engulfing bar, which is why it doesn't give a signal and then shoots off again. So there's another example. And then you've got these two over here. I'm not going to go into these, but again, potentially these are potential ones there that become good buy signals. So there's an examples of significant engulfing candles. One in an uptrend which we didn't take, one in a downtrend which we did take, another one in a downtrend which we did not take, and one in an uptrend which we did take, which you probably may have got stopped out on depending on where you put it, or if you waited for the pullback and got in, then you would have made a nice move there. So that's how I use the OGT price action indicator to set up my engulfing candles, and then when they appear, the due diligence I go through to understand whether or not to take the trade or not. So I really hope you found that useful. Please like, comment and subscribe, and I shall see you on the next video.